Hey, this is Justin with DayTradeTheMarkets.com on the last day of February 2013, and I wanted to do a few things tonight. I wanted to do a bar-by-bar replay of a day trading chart in the emini S&P and just talk about the different decision points with that. Before I do, though, I wanted to look at the bigger picture chart because that's for two reasons. Number one, to help you determine what to look for heading into tomorrow, heading into Friday, and into early March on a bigger picture level. And also because we like to look at the bigger picture to add some context to our day trading decisions. And again, you could use the bigger picture just as a swing trading vehicle by all means. But I'm going to talk about it in terms of this vehicle, or in terms of this video, as more of a vehicle to understand the bigger picture a little bit better while you're day trading. Okay, so hopefully that makes sense. So this is a 15-minute chart of the emini S&P, 24 hours. And again, this has got today, starting at the end of yesterday, and this has got, the rally early today and then the sell-off late in there. So we know what happens. I'm going to do a replay with assuming we don't know what happens in a second. And again, the point of the replay is not to show you, oh, you should have done this, you should have done that. I mean, anyone can show you after the fact what you should have done. That's not the point. It's to talk about, the reason I like to do the replays is to kind of talk about, okay, when this happens, what's the thought process? What are you thinking? What are your decisions? What are your trade-offs? That sort of thing. So that's the intention of the replay. But anyway, here's the bigger picture chart of the E-mini, and you can see that earlier this week we had that pretty massive sell-off at the end of the day. And then we tested this bigger picture support level a couple times. You can see that's just a strong wave of selling. We get a little bit of a buying there, a level 3 buying bar toward the end of that, which is telling us not that buyers have taken over when that bar comes in, but just that this pure wave of selling is over, and we've gone from one-sided selling to at least a two-sided market back and forth. And so at that point we want to test into this level, and you can see we started to get some strong selling around the 14.95 and tested down into the 85 area. And then attracted a little buying. And then yesterday, or Wednesday, the 27th, we had a pretty strong rally. You can see that's coming in with these level 2 bars and this pretty strong buying. It's not until this bar here that tells us we're more in a two-sided chop. Okay. Now today, after the fact, you can see we early in the session we had some level 2 buying, telling us we're going to go test these bigger picture levels. A level 3 bar right into that resistance level. So we know that a level 3 bar on the high or low of a day is either the beginning of something or it's capitulation. And you can see we got no follow through there. We started to attract some deceleration, and then some strong selling came in toward the end of the day. So again, this is the bigger picture, what we're looking at bigger picture, and heading into tomorrow and next week. This is really what we want to look at. Now we get a little more in depth on our market report in our member center, but essentially what we were looking at today was this 2350 area, which really was almost the high of the day. Heading into the day, that's the real kind of line in the sand level that we were watching in terms of essentially on a bigger picture basis. We were looking at around the 91 level as kind of the make or break point for the bulls to hold. So in other words, if bulls can hold this 91 level, which they did yesterday, which is why we had that rally, we wanted to then see what happens at the 2350 level, which we again tested today and sold off hard. So we're still kind of in a bit of a neutral bigger picture level until one of these areas is breached. So in other words, if tomorrow bulls can come in and have some strong aggression and take out this 2350 area bigger picture, we would say that bulls are fully in control bigger picture. If they cannot, then we're likely going to head down to this 91 level and test, and then down to this 84 or so level to test there. And if the bears can get below this 91, we're definitely going to go test this 84 area. If we can get below that, then it's in our opinion, we would say that bears are definitely in control bigger picture. And why do we talk about bigger picture when we're talking about day trading? The reason is if you can be in line with the bigger picture bias when you're day trading, you certainly put more of the odds in your favor. You still want to be nimble while you're day trading, but if you can get that in line, all the better. So that's kind of the idea. So with that as a backdrop, bigger picture, let's look at just a bar-by-bar replay of a 1-minute chart in the ES. Look at some of the day trading decisions that you might have been looking at. Okay, so let's do a replay of, again, this will be a 1 minute chart, and you could use this on any time frame, but this will be a 1 minute chart of the emini S&P on Thursday the 28th. And I just showed you the 15-minute chart, which I love to give kind of a, either to use as, for swing trading, or to use as a bit of a backdrop for the bigger picture. But one of the things that we also do is we have a report that we do each night for our members that really talks about what to look for. In other words, how to set the stage. And the reason I say that, let me just give a little more background on that, is we really believe that trading is all about putting the percentages in your favor. There's no certainty in trading. You're just trying to put the edge as well as you can in your favor, and the more often you can make good high edge decisions, the better your results are going to be. So in other words, you focus on your decision making process, you focus on making sense of the market, the results take care of themselves, rather than what most people do is they focus on making or losing money. That usually doesn't end well. So we look at various pieces of real-time evidence, which is what I'm going to talk about in a second, but we also like to get a bigger picture, an idea of the bigger picture bias and some bigger picture levels. Okay, so with that said, one of the things we do, like I said, was the 15-minute chart, but we also look at a report that we do. And again, you can pause this to look at it a little bit longer, but basically what we're looking at here is this, again, to not be confusing, this report was done Wednesday evening. I'm doing this video right now Thursday evening. We're about to do a replay of Thursday during the day. So the things that we really like to look for is kind of the key levels to watch, which are right in here, and certainly we recommend writing those on your, putting a line on your piece of paper to get set. Basically, we're looking at a neutral market bigger picture, which is a little bit rare, with kind of the key points being 2350 and 1491. If the market gets above those or below those, that would be bullish or bearish, relatively speaking. But we'd want to put, so that 2350 is something we really want to monitor. Then we'd also want to monitor the 1250, 10, 5, that sort of thing. So what we recommend doing, heading into each day is kind of putting those levels on your page. So here's a 2350. I'll make that kind of bold, and that's kind of a key line in the sand. We also then wanted to look at 1250, whereas another level we would look at. 10 is another level we want to monitor the market. Below that would be 5, that sort of thing. So heading into the day, neutral bias, these are the levels we want to watch, especially focusing in on this 2350. So heading into the day, that's our plan. Okay, so that's what I want to talk about. Now we'll look at the developing structure as the market goes. And what I'll do is I'll just pause this when something interesting occurs that we want to look at. And you can see here that the first thing we would want to look at is when do we get our first what we call major structure, and I'll point that out. We also want to see what the market would do if we got to testing that 1250 area. Okay, so we'll just let this go here in fast motion. Okay, now here's our first what we'd call a major structure, and this is what we call a high velocity move right in here. And one moment here, let me get an arrow. This is what we call a high velocity move. And basically what that's telling us is this is a relatively bullish indication. It's telling us there's a swift price move higher. And until either the low of that was taken out, because our expectation when one of those comes in made by buyers is that the low will hold. So until that low is taken out, or until somewhere on the right side of the chart some selling aggression were to come in, we have to believe that's a relatively bullish indication. So we want to monitor the low of that area heading in. Now, one thing you can do right away if you are on the bullish side of things, which certainly makes some sense knowing that we're likely to go and test this level up here based on yesterday's activity, we're likely to probably give 2350 a test. You can use what we call a high velocity move retracement trade, which would just be putting a limit order in toward the low of this high velocity move. That is certainly an option. And that's the case when you get a high velocity move that's on the high or low of the day when it's made. Okay, so just want to talk about some options. But really the key point that we like to talk about is it's about context first. Determine if you believe, and based on the evidence that we talk about, are bulls more in control, are bears more in control, that sort of thing. Then look for low risk, high reward trade entry locations. So rather than just jumping on board, you want to look for a lower risk trade entry opportunity. So again, that's a level 1 buying bar. Don't want to put too much stock into that. And those diamonds and triangles and dots you see, those are really just minor indications we call decelerations. that can help you if you have other evidence that you're working with. You don't want to put too much stock into those, but they're just kind of an extra thing. Let me pause this and talk about what we have developing at this point now. We have a filter here that's turned dark green, which means that it's strongly bullish. We have what we call a real-time support zone that's come in, and this is what we call a caution zone. It's telling us that normally that would be red for resistance, but it's telling us there's a lot of strength in the market underlying, kind of in the order flow beneath the surface of the market, a lot of strength. So you'd want to be a little bit, take that with a grain of salt. Don't look at it as strong of an area. We would want to monitor that for resistance, but our expectation is a little bit that this market's going to certainly want to test it. There's strength in the market, in other words. So at this point, we have a few options here. We can, we talked about the level 3 retracement, high velocity move retracement trade, which is, knowing that we wouldn't be a bad spot to get long here. That's just improved in terms of its odds now that we have also this support zone and we have a strong green filter. So getting in the market somewhere in this area at this point is certainly something you would be looking at this time. Now you can do that in a couple ways. You can wait and put a limit order in there right now, or you can wait until the market tests down there and to see if you get some kind of confirmation. And confirmation could be rejection of a selling aggression bar. It could be one of these decelerations. Again, that's where a deceleration might come in, where you have other evidence that you already are using or thinking to make a trade decision, and then a deceleration comes in, and that's simply going to give you that extra 1% confirmation, so to speak. Okay? So let's play this forward again, and I'll pause it when we need to, something interesting happens, and we can talk about that. So again, at this point, now there's another high velocity move made by sellers, but you can see it's intra range, or it's not at the high or low of the day when it's made. So it's just a piece of evidence. We would think short term this high would hold, but it's not something we would want to, because it's intra range. It's not something we would want to bet the farm on, anything like that. So again, no major aggression structure to this point. Market's relatively choppy in that sense. What we want to monitor is there some strong aggression that might come into the market? If so, we want to play off of that. And two, can this support zone in here hold, which has a lot going for it in that it's also at the low of this high velocity move. So those are a couple things, and whether you want to take that with a limit order or wait for some kind of confirmation, that's an option that you would think about, but that's what the evidence is certainly pointing towards. So now we've tested that. If you have a limit order, depending on where you did it, you're potentially long at this point. And stop wise, you'd probably want your stop below the low of the day. That's kind of your wrong point. We like to talk about at what point do you know you're wrong, and that's where you want to kind of place your stops, with the idea that you could bail a little bit earlier if some other evidence came in, like a strong selling aggression bar. So far we haven't had any. Let me pause that. Now here was a situation where we were testing that. I had that going really fast, but the idea was you're looking for potentially a chance to get in the market at this location, and if you're waiting for confirmation, you can wait for something like this, like a deceleration. Again, that's where you'd use a deceleration, not all of these that are all over the place, but when you have other evidence that you can use, that's a deceleration opportunity, or a rejection of this selling bar. In other words, the high of that selling bar was taken out. That's what we call a pretty good confirmation signal. Again, when you have other evidence that you're working with. So at this point, certainly there's a chance you would have thought about getting long. That's definitely would have been an option there based on what we like to talk about and what we like to look at. So I'll play this forward again. But again, this is an odd day in that we're an hour and a half into the session and we still haven't had what we would call a level 2 or strong buying or selling aggression bar, or certainly a level 3, which is extreme buying or selling aggression bar. And I personally like to really kind of wait on those level 3 bars to really give me a clue as to what's happening in the market, ideally. But you want to work with whatever evidence the market's giving you. And certainly to this point, we've had decent evidence that this should be support down in here, and that's come to fruition at this point. So if you are long, you're looking for a reason to get out. And let me pause it here. There is obviously a thought here that or you're seeing that some strong selling, sellers are making a strong push at this point, not extreme, but strong push. And so we're in the context of more of a buyer controlled market, but we want to monitor what happens with this bar. And if you were long from here, then certainly you would want to consider placing a stop a couple ticks below the low of this bar, because if this bar gets rejected, in other words, if we don't get much follow through and the high of this gets taken out and we have follow through, this thing's likely heading higher to test the high of the day. If we have follow through, then we're likely going to go test the low of the day. This is kind of an interesting bar mid-range in that it's telling us sellers are trying to make a push. How good of a job are they going to do at testing the lows of the day? So, if you had a long position on there, this is certainly something this is a bit of a red flag that sellers might be coming into the market. Place your stop a tick or two below the low of that bar. Okay, just at least that's the way that I certainly look at it. Let's play this forward again. Okay, you can see we took it out by took that low of the day out by a tick. Couldn't get any follow through below. Now we took the high out by a tick. Still no real follow through. By follow through, I typically mean a full bar above or below. So you can see there's a little mini battle, if you will, going on around that level 2 selling aggression bar. So it'll be interesting to see when we get a full bar above or below that structure. That'll be pretty indicative, at least very short term, as to the direction of the market. If we get a full bar above that bar, we're probably going to test the highs of the day. Full bar below, we're probably going to test the lows of the day. It's kind of one of these mid-range information bars that should give us some valuable information. So again, you can see none of this is black and white. There's no certainty, and there's no certainty in trading. You're trying to see what's the evidence telling me, and if you have good evidence as to what's truly going on under the surface of the market, which certainly we think this is, you can use that evidence to kind of put the puzzle pieces together, make sense of what's going on. And obviously, if you can make sense of what's going on in the market, you give yourself an edge. It doesn't take much of an edge to really increase your profits on a weekly, daily, weekly, monthly basis. If you can just stay out of one bad trade, or just get into one additional good trade per week or per day or per month, it's a huge difference to your P&L at the end of a week or a month or certainly a year. So that's if you could start thinking about trading in that way, that it's not about being perfect, it's not about being 100%, it's not about some magic indicator that's out there. It's about using good evidence to make better sense of the market so that you can make better decisions and increase your edge. And if you can consistently increase your edge and make better decisions, obviously the results are going to take care of themselves. So again, we've only had the one. If we just kind of recap what we've had so far, let me just pause it and take stock here. So far, we have had, heading into the day, we're basically neutral, bigger picture. We want to see what happens at 2350 especially. We want to see what happens if we test this 1250 area. Early on in the day, our first decent structure was this high velocity move that was on the high of the day at the time it was formed. We want to see if the low of that can hold, or if there's any other additional structure that comes in at that point. So early on, and the filter also went dark green. Early on, and we got this support zone. So we tested the low of this. It held. That's a bullish indication, at least short term. Then we had this next structure. We haven't had much structure today. It's been a choppy day if you look at it, or a nondescript day if you look at it so far. But we had one attempt, one push by the sellers. So we ask ourselves, how did the sellers do on this push? Well, not too well. They didn't. They got essentially rejected. So that leads us to believe, again, trying to put the odds in your favor, we're probably going to test this high of the day. So the next thing we want to do is say, okay, when we test this high of the day, what happens? Do we have a strong buying aggression push? If so, we're probably going to test this 2350 area, and then we'll ask ourselves the same question. So that's the idea. If we come up to this level, the high of the day, and there's no strong buying aggression, or it attracts some selling aggression, well, at that point, we're probably going to go test the lows of the day. Okay, so it's just you want to kind of take stock of what's going on in the market at different points by using the evidence that's there. Okay, so let's play this forward again with the idea, again, what's going to happen at the high of the day. Okay, boom, there's our answer. Level 3, or extreme buying aggression bar on the high of the day. So we want to ask ourselves, number one, can this low hold? Or does it get rejected? Number 2, do we take out this high? Do we have follow through? You could see that the next bar is a level 1 buying bar, and the bar after that has almost a full bar above it. It's a pretty good indication that there is some follow through here, and we are likely going to test this 2350, this major level that we want to really see what the market does. Now at this point, in terms of trading opportunities, again, if you were long from down here, hopefully you're still in and you didn't get shaken out, because there wasn't really any selling evidence to shake you out other than this bar. If you place your stop a couple ticks below there, knowing that sellers are actually coming in, you're still long. If you got shaken out, or if you took profits at the high of the day, very reasonable, certainly. Now we have an option. What do we do here? Do we want to buy this on a breakout? That's certainly an option. That's definitely more aggressive. Do we want to wait for this caution zone to turn over to green and buy it around this 2050 area with the expectation that we're probably going to head 3 points higher and test this level? Do we want to wait and see if the market can test down to the low of this level 3 bar? Those are kind of the aggressive, moderate, and conservative type ideas, with the caveat that there's not a ton of room to move. 2350 should act as some pretty good resistance, and then we would definitely want to monitor that level to kind of give us our game plan the rest of the afternoon, if you will. Okay, so let's play this forward again. Okay, we're heading higher at level 2 bar. So at this point, it's pretty solid bet that we're going to at least test up to this 2350 area. And we were tick from it now. We want to see, again, same idea. Remember just a moment ago I talked about what's the market going to do when we test here. Does it have huge buying aggression that punctures this 2350 level? Does it attract selling? Does it not do much? We want to wait for, we don't want to just buy this on a hunch or sell this on a hunch. I mean, I guess you could, but that doesn't seem like you're putting the odds in your favor too much. Instead, let's wait and see what happens. Is there strong buying aggression? Is there buying aggression that gets rejected? Does it attract selling? Let's just wait and see what happens at that key level. That is a very key level, kind of bigger picture that we talked about, again, heading into the day. Okay, so we'll just let it play forward here. Okay, now we're now that's attracted a little bit of selling. If that gets some follow through, that's definitely an indication. So let's see, do we get a full bar below there? Or do you just want to get on board aggressively? It certainly is a pretty low risk, relatively speaking. You can see there we had this is pretty odd, pretty rare. We had a 2-tick level 2 bar with absolutely no follow through. You got to be thinking that's a little suspect at this point. We're heading into some major resistance, and we could only get a 2-tick bar with some aggression, and it was immediately rejected. So again, it raises, certainly aggressive short makes some sense here, because you don't have to this is more aggressive than I would typically take. I want to point that out, but it's certainly, you can make a pretty good risk reward case in that you don't have to risk much. You could risk a point, 2 points at the most here, knowing this area could hold. If you're wrong, you're wrong, and you can reverse it. If you're right, there's certainly some room to move on the downside. Again, that would be considered pretty aggressive, but I know there are certainly aggressive people out there. So we'll play it forward. Again, you can just kind of see here, this is in fast forward, but in real time, this is 10 minutes have gone by. The market's moved less than a point. This thing's coiling, it's battling. Which way are we going to break? And not only which way do we break, but do we do so on some strong aggression, some strong buying aggression, or some strong selling aggression? This is kind of a key moment. Okay, so this is interesting. We took out the high. It was only on a level 1 bar. Let me make this a little bit bigger to kind of explain this idea. What we call, one of our members called this white space, or you could call this actually real short-term excess is another idea. If you look at this bar right here, this level 1 bar, so it's not a level 2, not a level 3. If you're going to make a breakout, you really want that to be on a level 2 or especially a level 3 buying aggression bar. That didn't happen. So that's a bit suspect. Also, you can see that just on a 1-minute bar, we've got 3 ticks of excess on the left side of that bar. Right here, if you look at from the high of the previous bar to the high of this bar, and then 3 tick, what is that? another 3 ticks on the right side. There's 6 ticks of excess just on that bar, which is on the high of the day. That's showing to some degree, just with price action, some rejection. Okay, so that's something that we certainly want to watch. At this point, getting long here, we haven't really had any evidence. We haven't had any breakout with a level 3 bar like we had on when we tested the high here. At that time, the high of the day, we had a breakout on a level 3 bar. That's telling us there's something there. Right now, we've had a 2-tick level 2 bar that was rejected immediately, which is odd, a 2-tick bar. We've had a level 1 bar with 6 ticks of excess on it when we tested that high. So it's suspect, okay? Now, it doesn't mean you want to necessarily get short. Again, it would be aggressive. You'd want to probably wait for some evidence to come in to suggest that. And we also want to monitor what happens at this green resistance zone. This area, quote, should hold. If that doesn't hold, that would be certainly short-term a bearish development, but that's something we would definitely want to monitor as well. Again, kind of taking stock, what's the next level we're going to test? What's the market do when we get there? So again, just recapping, we tested this level here, we had buying aggression. Let's go test the next level. This level here, we haven't really had any buying aggression to speak of. To think we're going to continue higher, that could come in. We haven't really had any major selling aggression that's had much follow through. So it's mixed. We want to just keep seeing what happens. So let's play that forward. Okay, so there's some selling aggression right here, this level 2 selling bar. Do we get rejection or follow through? There's a buying level 2 bar, no follow through. Things might be turning a little bit. Okay, short-term evidence is showing us this level might be in some trouble. You can see this is the first time we've had selling follow through. Selling level 2, no rejection but a little follow through. Buying level 2, no follow through higher but rejection. Okay, so we want to monitor this green zone to see what happens. And if this green turns over to red, that's a decent indication this thing might want to sell off. Okay, so this green zone's not holding. We're getting a level 2 bar. This thing's looking like it could, what we're seeing is we've had rejection off of 2350. Now we've turned over, let me pause this. We've turned over to red. So again, you can see this green support zone, we had no rejection of any selling. We had no deceleration. In fact, we pierced through it with a level 2 bar, selling bar, and you could see again there was some selling clues that were starting to come in ahead of that. Okay, now we've turned over from support to resistance. So do you want to get short here? Filter's gone from bullish to neutral at this point. There certainly is evidence that bears are coming in. There certainly is evidence that this key level has held, at least for now. So this is getting from, whereas this would be more of an aggressive short, this is more of a moderate to aggressive short in this area here. Okay, certainly how I would look at it anyway. So again, now we're testing this level. We keep decelerating when we test into this level. Okay, that's something to watch. No buying aggression. That's something to think of. What happens? We're in a battle. We have a little bit of a short-term battle. We're going to go one way or the other. What's the evidence going to tell us? Okay, selling, follow through. Okay, interesting. Testing back into there. At this point we're getting late in the day, but it's looking like bears have stepped in. They've come in. So we'll see what happens. And obviously here right around the cash close, it just goes wild. You can see there's some mega selling. This is our first level 3. Well, not our first. This was a level 3. Here's our first level 3 selling of the day. And you could see obviously the market just cascaded downward after that extreme selling aggression came into the market. So we're to the end of the day, and you can see also we tested into this 1250 area and into this 10 area. So bigger picture, what do you want to look for in the overnight and tomorrow? 2350 would be our, if the market gets above that, these bears that came in are going to have to get out of their position, and this thing's going to head higher. Otherwise, let's monitor the 1250 area, the 10 area, then 5, and ultimately we want to check out the 91 and the 84 levels. If the market gets below there, we could have a pretty strong move lower. So Hopefully you found this helpful. Again, this is for people that understand the power of seeing what's actually going on in the market evidence-wise, being able to put different pieces of the puzzle together, like to think about the market, like to try to increase their decision-making ability. You're going to love that if you're into this. If this made sense to you, I promise you're going to love this. If you're like, oh crap, I want the software to tell me what to do, when to do it, I don't want to think, you're not going to like this. So that's a thought. If you have other questions about this, by all means, let us know. All right, talk to you soon.